Stop scrolling. The SEC just hit pause on your XRP and Dogecoin ETF dreams. Again. Now, I was halfway through my first coffee this morning, the kind so strong that it could reboot a dead phone, when my notification feed lit up like a Christmas tree. 3 separate alerts, all shouting the same headline. SEC delays decision on XRP and Dogecoin ETFs. My reaction? A dramatic eye roll, followed by a muttered, "Of course they did." Now, if you've kind of hung around crypto long enough, these delays feel as regular as gas fees on Ethereum at rush hour. But today's news has a twist and a few juicy kind of side plots that could actually shape the rest of 2025. So let me tell you the story like it's actually happening to me personally, because in a way, it kind of did. Okay, so here's the deal. The US Securities and Exchange Commission, the same bunch that took 9 months to greenlight Bitcoin ETFs, have punted on 3 brand new spot-based ETF applications, right? 2 are from Grayscale and 21 shares, both designed to track XRP, and the third is a dedicated Grayscale Dogecoin Trust ETF. Oh, and a sneaky little subplot here, they also punted an amendment that would let the Bitwise Ethereum ETF add staking rewards. That's right. Staking yields wrapped in a tidy ETF bow, theoretically perfect for every kind of sleepy retirement account craving a little extra alpha. Now, the SEC says delay. Now, it's not a 5-minute bus mishap though, right? They crack open something called proceedings, a kind of bureaucratic kind of ritual that triggers a public comment free-for-all. For 21 days after the notice hits the Federal Register. So anyone from a Wall Street titan to your cousin's Reddit alter ego can submit an opinion. Now, then there's, of course, a 35-day rebuttal window where people argue back and forth, a kind of limp handshake disguised as democracy, right? The translation here, we're stuck in regulatory purgatory, while lawyers draft paragraphs no one actually reads. So why does the Commission keep ghosting crypto ETFs? Officially, they want to ironclad safeguards against fraud and market manipulation. Section 6B(5) of the Securities Exchange Act. Unofficially, pick your conspiracy theory, right? Protecting legacy finance, buying time for insider buddies, or maybe they're just binge watching reality TV instead of reading filings. Honestly, if I had to sift through thousands of pages of kind of legalese kind of every day, if you will, I would probably procrastinate too. And here's a fun fact. This is not our first rodeo. Back in March, the SEC already kicked the can for these exact applications. Right, remember how Grayscale XRP Trust was supposed to get a verdict by May 21st? Yeah, right, that deadline just self-destructed like a Mission Impossible tape. Bloomberg's ETF wizard, James, basically saw this coming, tweeting that the commission almost always rides the full 240-day timeline. And he says, don't expect approvals before early Q4 2025. Now that's crypto winter wrapped in bureaucracy. Meanwhile, of course, you've got Nate, ETF Stories resident optimist, right? Shrugs and says approvals will still happen. It's kind of like hearing one friend predict rain and another swear that it'll stay sunny, right? You kind of pack an umbrella and sunglasses just in case. Okay, so let's zoom in on the regular kind of investor angle then, right? Imagine you've got a stack of XRP chilling in a cold wallet and you'd rather own a tidy ETF inside of your brokerage app, right? No seed phrases, no hardware wallets, no sweating over firmware updates, right? That's the dream that these spot ETFs kind of dangle. Mainstream accessibility, tax efficiency wrappers, and, potential inflows from retirement funds that couldn't touch raw tokens even if they wanted to. But And here's a big but. Every SEC delay is kind of a door slammed in your face, accompanied by a polite thank you for your patience. And the timing, of course, is comedic, right? We watched Bitcoin ETFs launch in January with fireworks, billions in inflows, endless CNBC segments. So altcoin holders started chanting, when XRP, when Doge. And today's answer is, not today, fam. Right? Now, if the crypto market were a reality show, right, this would be the cliffhanger ending where the host kind of whispers, tune in next season. And then the screen fades to black. Okay, quick pit stop. If you want uncensored real-time commentary while we kind of wait for the SEC's next plot twist, why don't you jump into our free crypto Discord server? There's a link in the description down below. We trade memes, we chart, and occasionally drop the midnight strategies, and sometimes even those kind of wacky ones that maybe even work from time to time. Okay, so let's get back to the subplot that nobody's actually talking about. This is the Bitwise Ethereum ETF staking amendment. So imagine an ETF that tracks Ether's price and pays you staking rewards, like renting out your kind of spare bedroom on Airbnb while doing zero cleaning your actual self. Right? Now, for traditional investors, that's the chef's kiss of passive income, but the SEC flashed a yellow card here, worried about compliance nightmares and how those yields get taxed and disclosed. Now, I get the caution, but man, the idea of a yield-bearing ETF in a kind of post-zero rates world is, well, tantalizing. And here is where things really heat up. Crypto Twitter claims that these delays might secretly be bullish, right? Every extension shakes the bottle, building up pent-up demand. When the SEC finally yells go, institutional money could flood into XRP, Dogecoin, and Ether staking products like a tidal wave. So think of a soda that's been shaken 10 times. Pop the cap in October and boom, of course. That optimism assumes that the commission actually eventually says yes. And if they do slam the door shut, well, we've seen markets tank and bounce before, breakfast. Okay, so let's sprinkle in some numbers so that this feels kind of sciencey, right? Analysts project that altcoin spot ETFs could attract $3 to $6 billion in year one. Now, that's pocket change next to Bitcoin's haul, but colossal if you're Dogecoin, right? The whole entire circulating market cap still swings on Elon Musk's mood. So remember, right? ETF access means retirement funds, right? Insurance companies and robo-advisors indexing crypto the same way that they index emerging markets. Of course, investor protection is the SEC's favorite catchphrase, and frankly, it's not baseless. Fraud, wash trading, spoofing, these shenanigans haunt the Commission's nightmares. Now, they want surveillance sharing deals with exchanges and rock-solid custody. Coinbase Custody steps in as the guardian for these filings, promising third-party audits and daily disclosures tied to CME-approved benchmarks. Is that enough? Well, we're going to find out eventually. Now, let's not forget the potential political layer here, right? It's an election cycle, right? And both kind of parties, they suddenly adore innovation, right? We've seen this. Lawmakers kind of tweet about job creation and generational wealth, while lobbyists kind of wine and dine on K Street, right? Pushing for clearer crypto rules. The SEC sits in the kind of splash zone. Approve too fast and you're reckless, too slow and you're stifling innovation. The result? Delay. Collect comments and delay again. And so we have to ask ourselves, what do we do now? Well, first, I think we've got to breathe, right? We survived Mt. Gox, we survived the ICO mania, the DeFi rug pulls, and of course, the mentalness that is the JPEG apes, right? We can handle paperwork limbo, right? Second, of course, let's use this downtime. Let's read filings. Let's sharpen our strategies. Maybe dollar cost average your favorite kind of crypto assets during dips, right? Volatility is a trader's playground, so let's not waste the break. And speaking of trading, if you haven't checked out Blowfin yet, hit the link that's in the description down below, right? It's the best up and coming crypto exchange that I've tested lately with slick tools, for scalping every single SEC headline. Now they're dangling some pretty juicy bonuses for new signups as well, so fire up an account and start trading crypto today. Okay, so let's go ahead and peek inside the public comment process. This is where asset managers, academics, and that one guy who types in all caps to send letters, right? Opinions range from "this democratizes finance" to "crypto will end civilization," right? The SEC kind of sifts through the pile of looking for data and, legal kind of logic, but they also kind of gauge public sentiment from it because optics kind of matter when Congress is watching. Market manipulation is probably going to be the biggest elephant in the room. Wash trading on shady exchanges was, practically an Olympic sport back in 2017. Right? The proposed ETFs counter that with real-time benchmark pricing and third-party auditing. Right? The SEC will want iron bars kind of cages, around every single price feed so that whales can't spoof order books. Now, I respect the intent here, even if it feels like wrapping the entire zoo, I guess, in bubble wrap. Still, every delay kind of chips away at confidence, right? Retail investors, they see SEC delays again, and they will think crypto's stuck in quicksand. Institutions, well, they will smell the opportunity. They will accumulate quietly before the gates actually open. So patience can be both kind of a curse and a bit of a cheat code. Let's talk about the best case scenario then, right? October rolls around. The SEC approves XRP and Dogecoin spot ETFs, plus Ether staking. Brokerages kind of plaster banners, invest in XRP with one click, inflows will surge, liquidity deepens, prices pop. Thanksgiving dinner shifts from "tell me about Bitcoin" to "what's this Dogecoin thing in my 401k?" That is, of course, mainstream adoption. For every best case scenario, there's going to be a worst case scenario, and that's going to be the SEC that denies everything. The market would dump. Crypto would, or at least crypto Twitter would melt, and memes would fly. Then, of course, life just simply goes on. Remember when China banned Bitcoin for the 11th time? We've danced the waltz before. So where is my head at? Well, somewhere between cautionary optimistic and hilariously kind of jaded, right? The SEC delays are now a crypto season onto themselves. It's kind of like FUD, that fear, uncertainty, and doubt in December, or, the halving hype in April, right? They kind of give us time to research, time to build, and time to laugh at our collective insanity. So let's use that time wisely. And speaking of using time, of course, swing by the Discord, the link is in the description, because we unpack these filings line by line in voice chats. And, the hive mind there is better than kind of refreshing CNBC. To kind of boil it all down, the SEC isn't saying no, they're just saying not yet. Now, they want more data, they want more comfort, and they probably want fewer meme coins in congressional hearings. So whether that's, prudence or a hurdle kind of depends on your own caffeine level here. Now for me, it's another chapter in a saga that we'll someday laugh about when ETFs exist for every single blockchain under the sun.